good everyone, and welcome to today's market fundamental breakdown with Tony FX. This is more of like a market insight, our trading insights for the trading period of 26th February to the 3rd of March, which is the next trading week, today to Friday this week. So like you all know, my name is Anthony Phillips Njoko, and if this is your first time, please smash a like button, comment below. This comment below is going to really help the algorithm to get this video in the eyes of traders that need it out there. A lot of traders don't really know the market direction for this time period, so you can comment below awesome trading insights, awesome trading forecast by Tony FX, and it's going to help us get this video to the hands of people. So myself, I'm a certified trader, so the current information I'm giving to you is based on educational purposes, and it is a very detailed and very correct and accurate principles and approaches to the market. So with that said, we'll start with DXY. DXY is the index, is an index for dollar, which defines and explains the strength of dollar. It defines and explains the strength of dollar. That is what DXY is. So if you guys can remember last week, I told you guys that DXY was currently at this position as at last week. They were expecting market to go down a bit, which market did. And after market went down a bit, its market was here. You can see that this is Friday where market closed. Market opened on Sunday. You understand? So market was here. I told you guys market to go down a bit, and market went down. After market went down, we got this buy structure here. And then market, I told you guys market target was 105, and you can see market hit that target 105 as at last week Friday, and it's currently inside our calls. Market is currently inside our calls. So from these calls now, if you're a trader, you should know what this calls means. We'll be looking for our entry, and I'll be looking for a corrective structure. It's going to be an impulsive corrective structure, which could be a big candle. The corrective structure could be this big candle, like this candle. You can see there, 1, 2, could be the corrective structure, or the corrective structure could play out like this. It goes up, comes down, goes up, and comes down again before another push to the upside. Do you understand? So the corrective structure I'm expecting at this point could be something similar like this. Like you see here on my trading journal and my trading plan for the week, I expect a corrective structure either as one impulse wave or as a structure. Then an up move, we could see a pullback. So the corrective structure I expect is something similar to this. It's something similar to that. That's the type of corrective structure I expect from the market. So if the market gives that corrective structure at this point, those that are not in, we can take that corrective structure, sell trade for DXY, and then from here we can now expect market to move to the upside, because this is more like this line we see over here is more like an inner trend line. H4 is an inner trend line, H4. So but we're expecting a corrective structure. Exactly, like I told you guys, when market goes into 105 target, I'm not looking for buys anymore. I'm looking for sales on dollar. Okay, so now that's it for DXY. Then we go into Euro USD, which is our favorite major currency pair. Major currency pair. So for Euro USD, you can see that we have a cause. This is our course. If you are a student, if you have gone through our pro trading course, you understand that this is a course. And when market goes into this course, I need to see market come into this course. I'm not taking any buy trades here until market goes into this course and gives us our entry criteria. If you want to know more about our entry criteria, you can jump down to our website, www.enerdigitallane.com. On our website, I'm going to show you how you can be able to make good profits, risking your account with proper risk management, managing trades exactly in a very profitable way, and be able to make results, be able to earn a living from trading. So from here now, at this point where market is, we can see some sell coming as at Monday and Sunday as the market opens up. We get a gap that will take the market. We need to get market into these calls first before I see a buy structure, and then we get this corrective structure to the upside. So after we get this corrective structure, it could be an impulsive corrective structure or just a corrective structure with an ABC wave. Then before we get a sell to the downside. So that is what I expect from the Euro years. As you can see, I expect market makers to trap buyers before the next sells. I will place my buy trades after I see an MSB Arutio at the calls for a 15 pip risk and 45 pips reward, then position for sell. So what I'll be doing here is scalping, mainly scalping. I'm not taking swing trades here. So I'll be looking for the most little risk, as in I'm looking for a very tight risk so I can get rewards at a very quick pace and leave the markets, because I'm going to be scalping. I'm not going to be swing trading. So the next is AUD USD, which is one of our major currency pairs. And one thing I admire about AUD USD currently is that it is the first pair that is going to open its session, which is Asian session. And based on what you can see right now, it is currently inside our calls. It's currently inside our calls. So I expect a corrective structure upwards. So I'm going to focus on that corrective structure because it is already inside our cause. This is the cause we marked out over here. I tracked the cause down from this point. I tracked it up to this point, and it has not fulfilled efficiency. But last week, Friday, the market has fulfilled its efficiency at that cause. So I expect the corrective structure upwards. So I'm going to focus on it because it is the only pair right now that is inside a cause aside from EU. Then I'm going to add more buys as the market opens up officially by tomorrow. I'm going to add more buys if I see more entry criterias. Then we'll be taking it up to this H4 validation point to the upside, bearish validation point. This is where I'll now be looking for my sell structure. So this is going to be an impulsive. It's going to be an impulsive corrective structure. Oh no. I mistakenly clicked on that. It's meant to be on the H4. Yeah. So this is going to be an impulsive corrective structure or a minor corrective structure. And from this point where we have the H4 validation point, I can now be looking for what the sells from this point. So on this one, I expect 15 or 20 pips stop loss depending on the when I see my bias, my entry bias, and then the gap between the entry point and the last sell stop position. That's when I'll now place my stop loss. It could be 15, it could be 20, it could be 10. But one thing I'm sure of is that it's going to be a 1:3 risk to reward ratio on my trade. Then the next on our list is US oil. US oil. So US oil, you can see that US oil is currently forming for us the corrective structure. It has completed the impulsive structure. From this point, last week I told you guys the market is going to sell. You can see here. So market sold, giving us the wave 1, 2. This is the impulsive wave 1, 2, 3, 4, and completed the tier 5. So currently heading into this week, we'll be seeing what a corrective wave of A, B, C. So I expect market to push higher from the position to complete the corrective ABC wave before the next move. So the US oil will be increasing in price, probably around that 79 to 80 dollars per barrel. $79 to $80 per barrel, and from there we'll now be looking for the next sell impulsive structure, the fractal sell impulsive structure, then that is going to push this market down to 60. So that's what I'm looking out for. And then which means that US oil is going to increase in price. So if you haven't bought petroleum today, I can see that petroleum we have about 300 naira per liter at the fuel station. If you haven't bought petroleum, you can go and buy it in a very large quantity at 200 naira per liter, because price is going to spike up this week. It's going to spike up. So the next is gold. Man, gold is so juicy. I know a lot of people ask me, why don't I trade gold? I just tell them I don't trade any pair that I don't know how to apply its proper risk management. So as at last week Friday, I studied how to trade gold's risk management, and this week I'll be implementing what I studied. Over here we have the ABC corrective structure for gold, and it has completed this corrective structure, the ABC corrective structure. The next I'll be looking out for is a push to the upside to start the next wave. I'll be looking out for a push to the upside to start the next wave over here. So from here now, I'll be looking for a buy, which is going to be either an impulsive corrective structure or a minor corrective structure. And from here now, we start looking for a next sell to go and fulfill this H4 validation point, because at here this H4 validation point has been fulfilled. So we'll be looking out at that point for the MSB RTO, and then we take our buys here, and we have to track down the next corrective structure. Sorry, the next bearish H4 validation point. We have to track it down. The next H4 validation point, bearish H4 validation point. It could be this is the next one I can see at this B structure. So this corrective structure could be impulsive into this point, and for me we could now start seeing the next sell to the downside, or it could be minor. So that's it for gold. Then the last on our list is the currency of the people, digital currency of the people, which is Bitcoin. So Bitcoin on our list, you can see Bitcoin tapped 25K 3 times. This is our quarter point area, 25K, and also it then broke down. Before, when you tapped the first time, it went down to 23,500 and went back up, tapped it the second time, went down to 24,000 and tapped it the last time, which is forming a triple top. So the principle to trade a triple top is when the market breaks this last top, this last point here. That's the principle. That's when you place your sell. And if you can see, as soon as market broke that top, this point here, this low that created the last high, this was at the point between 24,500 and 24,000. The market then came back and gave a correction back to 24,500, and from there we have been dropping. Yes, we have been dropping. So I tracked down the wave structure. Over here you can see that Bitcoin has given us an impulsive wave of AB, an impulsive wave of 1, 2, 3, 4, 5, and currently we are in a corrective wave of A, B, C. So we're expecting Bitcoin to go back into the 24,000 mark again, giving you a next entry opportunity down to the 21,500 points. So that is it. So currently everything is bullish. No, everything is in a corrective structure. It is not bullish, it's in a corrective structure. So, but one thing I can tell you guys is that this corrective structure could be impulsive. It could go up to 25,000 again, because this is cryptocurrency. It is highly volatile. So if it doesn't go up to the 25,000 mark again, we're heading to 24,000, 24,500. So within the 24,000 and 24,500, that's why I'll be looking for the next sell structure. But currently I'm trading it on a buy right now, because I know that we are on a AB move now. We're going for the B move. From B we're going to C, down to 21,500 for Bitcoin. So but if it goes contrary to 24,000 and goes to 25,000, we see the next cell structure. But it's a 50-50 mark, because one thing I noticed so far is because fiat currency, the government's money, which is dollar, pounds, euro, they were weak against dollar. They were weak against dollar. Why Bitcoin was doing all this? So this is the people's money. I think this currency gives people are encouraged by the power of the Bitcoin. currency. So I think this currency could literally not go as we expected based on price action. It could form its own price action, not minding what the fiat currency market is doing. Not minding. So, but based on wave structure, which has to do with the emotions of traders, everybody in this world lives based on emotions. Every investor and business person does investment based on emotions. I think this country is going to be a good country. I think this business is going to be a good business. You put in your money, you put in your efforts, you build the team, you do the investments, you make the profits, you grab. So that is really what I see when it comes to investing. So if BTC USD is the people's money, people are confident about it, even when fiat currency is going down massively. Fiat currency is going down massively. Bitcoin was going up. Do you understand? Because it is the people's money. So currently, based on the structure I see, we are currently at the A structure of the corrective structure, A wave of the corrective structure. From there now, we're expecting the B, then from B, massive sales down to the C. So that is it for the pairs. We're going to now check out the calendar, the financial calendar, and we use my FX book, so it is loading up currently. We're going to use the calendar to figure out the days of the week when we're meant to give the charts good attention, because it is mainly for fundamentals. So starting up the week today on February 26th, you can see 2023, we have NZD coming in by 10.45. Wow. So these are retail sales year over year and retail sales quarter over quarter. NZD. So from here now, you see it's high impact news. Then the next on our list is on Monday, which is tomorrow, the 25th. We have dollar by 230. This is durable goods order month over month. Durable goods order. So by 230, from that 230, I can say that, yeah, dollar is going to have some high impact news. But based on what the news is showing here, I cannot really determine the direction the market will go. Then on Tuesday, February 28th, by 1 a.m. in the morning, we have Australian news, and then 8:45 a.m. to 11 a.m. we have Euro news, which has to do with inflation year over year and retail sales year over year on Tuesday. And then by 2:30 we have goods trade balance for the dollar. One thing I need to explain to you guys is this: news really affects the emotions of people. And since news affects the emotions of people, news also guides the direction of the market. It also guides the direction of the market. And most times, the market is already giving you the structure it wants to play out. News is just there to give you a confirmation. I said the market has already given you the structure it wants to play out. News is just there to confirm this structure. So that's why first of all I show you the chart, so you'll be able to see the bias, the direction where we expect the market to go to. Then we confirm this bias within the trading week with the news. Do you understand? So it's more of combining the technicals together with the fundamentals, and by that period, that day, we also add in the sentimentals. Okay, so that is what we see here. On Wednesday, we have 1:30 a.m. news for Australia. Then by 7:30 a.m. we have Europe news down to, wow, this is a lot of high impact news on Wednesday. That's the 1st of March, Wednesday. We have a lot of high impact news, which you can see Euro news went into New York session. A lot of inflation, full year GDP growth, CPI inflation, CPI inflation, CPI. I think almost all the countries declaring their CPI that day. The remaining countries is declaring their CPI that day. And then you can see on Thursday, we have Japan by 6 a.m. in the morning. Then 9 a.m. we have Europe news, 9 to 11 a.m., which is the new London session candle. So on Thursday we'll be trading London session fully. Then on Wednesday you're going to trade both London session and dive into New York session. So it's going to be a full trading day on Wednesday. It's going to be a full trading day. But on Thursday it's going to be mainly London session. You can see here the fundamental starts by 9 and ends by 11 for Europe. Then 2:30 New York session dives in where we see USD jobless claims and then continued jobless claims. Well, I think the job market for the United States of America is good and comfortable. So this is going to be positive news for dollar. Then on Friday, this is the first Friday of the month. We are meant to see NFP. Let me see. Wow, wow, wow. No NFP. This is the first Friday of the month, so we're meant to see non-farm payroll. So, but what I'm seeing is non-manufacturing PMI. So, but on London session we have 8 o'clock, and the trading ends by 10 o'clock, which is for euro. Interesting, interesting. So that is it. Interesting. That's it for the fundamentals for this week we're diving into. So, thank you so much for being on today's forecast. We'll be having a live trading session within the week, probably on Wednesday. I'm going to choose a session, either London session or New York session. We have to trade it together. And any trade I place, you'll be able to place the trade, apply proper risk management, and as I make profit, you make profit, and as I make loss, you make loss as well, because it is a game of probabilities, a game of risk to reward, and it's a game of right approach, mindset, and principles to the market. Thank you so much for being on today's rise on being on today's trading forecast and technical breakdown with Tony FX. I hope you're able to like this content, share this content with your community, comment below for the algorithm to show this video to a lot of people, and subscribe, follow us, follow our social media handles, and you'll be able to be updated, because within the week I drop updates within our social media handles and videos on our social media handles as well. Do have a wonderful trading week.